What's up, guys? Welcome back to Taxes Made Simple. I'm your host, Carlton Dennis, and in today's video, I have a very important message for aspiring tax professionals or CPAs or even tax strategists. And what I want to do is I want to teach you 7 fundamental rules that will help you on your journey to becoming a 6, 7, or even an 8-figure tax professional if that's what you desire. One of the most important things that I've been able to do is separate myself from the average tax accountant who just files tax returns. But I want to go over some principles that will allow for you to find success if you're trying to become a tax professional, trying to become a tax strategist, or trying to make a difference in your business owners' lives that you can have an impact on. My goal in today's video is to give you 7 fundamental keys that will help you navigate on becoming the tax professional that you can become for your clients. So without further ado, let's dive in. Rule number 1, never tell a client that they can't do something. It is your job as a tax professional to show them how. I want you to really try to put yourself in your customer's shoes. Most of your customers do not have the tax background that you might have as a tax accountant or a tax professional. They're not reading the books that you read. They're not in front of computer software. They do not know what taxes even mean. Yet when they come to your office, they're excited to work with you. They're excited to figure out ways in which they can reduce their tax bill. They want to get help. But if you immediately start off by telling this customer who's excited and high energy that they can't do certain things or that they are not going to be able to do certain things, then it could put a damper on their relationship with you. And let me explain how that works. You see, when a taxpayer comes to you, they're looking for ways in which that they can get help. But if you immediately shut the door off by saying, no, you can't do this, no, you can't do that, then they assume that you're someone that can't help them get where they are trying to go, which is paying the least amount of taxes possible. What ends up resulting from this situation is they feel like they can't come to you anymore with questions, and they feel like you're not somebody that's really positioning yourself to help them. How we can fix this as tax professionals and how we can fix this as tax strategists is by doing the exact opposite. Rather than telling customers they can't do something, rather than using the no word in conversations, always frame the conversation around how somebody can do something. And this is what changed the game for me when it came to becoming a tax strategist. I realized working in my mother's firm early on that we had a lot of tax accountants, and there were a few of our team members that were tax strategists. But one of the things that I noticed about the tax accountants is that the tax accountants had a hard time trying to show me how I could help a customer. I would have to ask them all of these different questions over and over again just to get the answer around how I can actually do something for a customer. And it shouldn't be like that. And so when I decided to jump on YouTube and I decided to become a tax strategist, my number 1 goal was to simplify the ways in which you can take write-offs. And it really comes down to information. Rather than telling somebody they can't do this or you can't do that or this is not how it works, why don't you show them how it works? Show them how to take the write-off. Show them how to take a home office deduction or how to switch a corporation around or how to place a child on payroll. And if you're someone right now as a tax professional or a tax accountant who does not know how to show your customers how to do this, you need to be transparent and let them know. Because what you don't want to do is you don't want to string along all these taxpayers who think that you're helping them reduce their tax bill when truly all you really are doing as a tax professional is just filing a return because you lack the knowledge to be able to help them. So here's what we're going to learn from this first rule. We are going to now change up the conversation. If a customer comes to us and we know in our heart of hearts that they can't take this type of write-off, rather than telling them no, we're going to show them how they can do it for the future. Although, sir, although, ma'am, this deduction was not completed in time, here's how I can help you set this up for 2023 or for 2024. And this is how you position yourself to be someone who can help someone in the marketplace of tax. If you choose to be the tax professional that says, hey, sorry, you can't do that, it's too late. Maybe next year. I'm not sure if that's a good idea. You will be like every other accountant and every other CPA. And I know it because I deal with thousands of clients. I have so many customers that come to my door, and I'm not trying to brag or boast, that we literally turn down thousands of clients a month. And the clients who come to us are coming from CPAs who are saying these things to their customers. No, you can't do it. Sorry, that can't happen here. I don't think that's a good idea. Okay, let's change up the conversation. Rule number one is rather than telling your customers you can't do, show them how. All right, guys, hopefully that first one stuck with you. Let's jump into rule number two. Do not, tax professional, confuse tax preparation season with tax planning season. Those are two different things and two different conversations. Here's the reason why I'm bringing this to your attention. You may have some taxpayers who come into your office during the months of January, during the months of February, March, and April. These are the tax preparation months. During that time period, your job as a tax accountant or tax professional is to gather information, to place it into the software to file the return. You may use some of your CPA abilities or some of your tax professional abilities to figure out what other things are missing that need to go into that return. But that's really what our jobs are during the months of January through April 15th. During this time period, there's not any strategies that we can really leverage that are meaningful other than cost segregation studies and putting money into retirement accounts. And your customer needs to have already owned real estate in the previous year to even use the cost segregation study strategy. And your customer has needed to have set up a 401k account or an IRA account if they're trying to fund it in the year after the year is over. So those are really the only things that can really be meaningful, right, to reduce somebody's tax bill when you get to the tax appointment. So the goal of an accountant in the tax appointment is to focus on filing the returns. But you as a tax accountant, you need to let your customers know that there is a difference between tax preparation season and tax planning season. You have to let them know that although we are filing taxes for last year, we're already in 2023. You're already earning income this year. Guess what? You're already being taxed. This is what I want you to let your customers know. 2022 is over. Tax season ends December 31st when the ball drops in New York. That's when the year is over. It's like a football game that's ending, like the World Cup. Once the World Cup is over, we can't go back and change the score. We can kind of look at the game and see what we could have done differently, but we can't go back and change the outcome. Unfortunately, this is how taxes works. If you were not proactive enough as a taxpayer to meet with a tax strategist in the months of April all the way through December 31st, then it is too late to do anything meaningful to reduce your tax bill. Hence why there is two different seasons. Tax preparation season that exists between January through April 15th, and then tax planning season that starts right after April 15th and exists all the way through December 31st. Why does tax planning season, Carlton, start right after April 15th? I'll be honest with you, it doesn't have to start right after April 15th. For most taxpayers, they're still getting caught up on their previous tax returns. Some of them are on extension. Some of them are waiting for their bookkeepers to get their items done. Some of them are waiting for K-1s. So if you're that type of taxpayer who's still getting the tax returns filed, that's your biggest hurdle to accomplish first. Let's get the returns filed first. Let's get the monkey off your back. Then we can jump over into 2023 and start projecting out what your income's going to be. And by the way, if I'm going to project out your income, shouldn't I at least have one quarter to work with? Like, give me the months of January, February, March, and April to see how much money you brought in, how many expenses have gone out the door. So that way I can multiply with the remaining 3 quarters in the year and have a projection of what your estimated income is going to look like. With this information, me and you can already know how much you're going to owe potentially. So now we can start having a conversation about what we could potentially do to bring down that tax bill. Lesson number 2, do not confuse tax preparation season with tax planning season, taxpayer. Do not confuse tax preparation season with tax planning season, tax strategist. Do not confuse tax preparation season with tax planning season, CPAs and tax professionals. If you're going to be telling your clients that you can help them save money on their taxes during tax season for the previous year, chances are you're not going to be able to help them that much unless they already own real estate or they actually want to put money into retirement accounts. And right now, there's not many taxpayers who are putting money into retirement accounts and being happy about it. I think there's more taxpayers who are looking to leverage that money and see how they can grow that money strategically and have control over it. And so if that is you as a taxpayer, I understand how you feel, and I understand what it's like to want to have control over your money. All right, lesson number 3. This one's a big one for me. Lesson number 3 is, tax professional, be proactive, not reactive. Whew. I would say probably 70% of the business that me and my firm receives every single year is tax planning business. And the reason why we do a lot of tax planning business is because There's a lot of taxpayers who want to be proactive instead of reactive when it comes to their taxes. So they will meet with us in the months of May, June, July, August, September, October, November to figure out how they can reduce their tax bill for that year. They're not going to come to me in the following year because they know the year is already over. So they're going to be proactive. You as a tax accountant need to be proactive with your taxpayers. This is so monumental. If you're not proactive, what ends up happening is your customers get on Google, they Google search my YouTube videos or someone else's YouTube videos. They learn about all these different deductions and write-offs and different trusts that they can set up. And then they come to you about it. And then you tell them, oh yeah, actually you could do this. And then they're pissed off that you didn't tell them that they could do this because you were not proactive in trying to help them save money. Maybe that's not your job. Maybe your job is truly to just be a tax accountant. Then you need to inform your clients that your role is to just be their accountant and that during the month of April 15th all the way through December 15th, they need to go find a tax strategist. Yeah. My job here is to help you file the returns. You might need to go find a tax strategist that can help you leverage all those strategies that you just researched. That's not my area of expertise. And be real with yourself and be real with your clients. Because what you don't want to do is you don't want to have your clients thinking that you're helping them and they find out 10 or 15 years later, dang, I could have done all of that. I should have been an S corporation. I could have had management company years ago. I could have been doing accelerated depreciation. Why didn't my accountant tell me this? Why wasn't he informing me? You as an accountant need to be informed yourself, and you need to let your customers know whether or not these are things that you're capable of doing. And this is how we can be proactive instead of reactive. And taxpayer, if you're listening to this right now and you're like, yeah, I've had that experience happen to me before. It is up to you to find your tax professional. It's up to you to be proactive right now to figure out who you're going to plan your taxes with. And I hope you find the right one. All right, rule number 4 for tax accountants and tax professionals is to know your thresholds. This is so important. There's so many different thresholds in the tax space. There's thresholds from when you should switch from a sole proprietorship to an S corporation or an LLC to an S corporation. There's thresholds of when you should switch from an S corp to a C corporation. There's thresholds for how much money you should be paying a management company. There's thresholds on how much you should be paying yourself in payroll. And all of these different thresholds have an impact on your taxes because there are certain deductions that you could miss out on just by not knowing the thresholds correctly. There are certain deductions you could miss out on because your CPA or tax professional does not know thresholds correctly. For example, the QBI deduction. What is that, Carlton? The QBI deduction stands for Qualified Business Income Deduction. You can get 20% deduction on some of your net business income, but there's a threshold to where it starts to phase out. And there's a threshold that limits you based on how much money you've claimed in payroll. So your tax professional can determine whether or not it makes sense for you to take a bigger payroll or a lesser payroll, depending on the QBI deduction, which is a 20% deduction on your business income. I'm wondering, taxpayer, if you're having a conversation with your tax accountant during the months of November and December about the QBI deduction in your payroll. And that's what really changes this game, right? Because if these conversations are not happening, it's like, ooh, Carlton, I'm without. Am I leaving money on the table? Most likely you are. So we need to take like a financial DNA, look under the hood and kind of see what's missing here. Were things going right over the last couple of years, or have things been kind of out of whack? So rule number 4, tax accountant. Rule number 4 is to know your thresholds. If you do not know your thresholds as a tax professional, it is going to be extremely hard to advise your clients. I encourage you to study your thresholds every single year, brush up on them, and know your thresholds to be able to support your clients. All right, guys, let's jump into rule number 5. As a tax professional or a tax accountant, it is your job to get creative. That's what we do. It makes our jobs pretty fun. And one of the things that you need to do is you need to be able to use all of your resources. As a tax accountant, I have helped so many taxpayers discover how they can place their children on payroll when they didn't know how they were going to do it. And we had to come up with ways in which we were going to help them place their children on payroll, or place grandchildren, or even place grandparents on payroll, or even set up foundations where these children or grandparents are underneath a 501c3 private family foundation. These are things that we have to take into consideration because as a taxpayer, you're trying to build wealth strategically. And the best way that you can do that is minimizing your tax obligation. And one of the ways in which you can keep money in your pocket is by keeping it in your family's pocket. Am I right? So how about instead of only being told, 30% of the tax code, how about you utilize 100% of the tax code? And that revolves around your tax accountant, your tax professional being strategic and being creative as well. One of the things that I hear you guys admiring about on the internet is, Carlton, I didn't know you could establish management companies. That was a good one, Carlton. I hear that all the time. Well, that's just because we decided we wanted to get creative. If you can decide to utilize a management company that's your own, as opposed to hiring another management company, couldn't you pay that management company and receive a tax deduction for the money being moved over? Yes, Carlton, the money that is being moved over is still taxable income, but couldn't you claim different expenses instead of your operational company? So this is where your tax professional has to determine how this will help you and make sense of all of these strategies before you even think about setting something up. And that's what really working with a tax professional is about. It's like taking steps in confidence. It's not walking around with a blindfold on. It'd be pretty scary just watching a YouTube video and just saying, okay, maybe I need a management company. I'll just set one up tomorrow, when you don't even know how you're going to leverage it. So the best thing that you can do is to make sure that you're working with someone who's specialized in that field, and that person needs to be resourceful and they need to be creative. Rule number 5, make sure you're using all of your resources as a tax professional. All right, guys, we're almost to the end. Let's keep going. Rule number 6, utilize tax credits for your taxpayers. I think that this is something that many CPAs are starting to do now just because of COVID-19 and all of the government funding and different programs that were created. But one of the things that you need to make sure that you're doing as a tax professional is make sure that you're thinking about tax credits. One of the things that me and my office did this previous year is, rather than just utilizing cost segregation studies, is we started implementing solar energy credits on rental properties that our clients were purchasing. So rather than just having a client receive accelerated depreciation, we were also receiving a 30% tax credit on the money that they were investing in their solar energy. Not only does this help improve what they're doing from an investment standpoint by saving money on energy costs, it's giving them a dollar for dollar tax credit up to 30% of the amount of money that they spent. Not only were we looking at the solar energy credit, we were looking at the employee retention credit for many of the taxpayers who carried a lot of employees during coronavirus and were able to weather certain economic conditions. You could qualify for the employee retention credit and receive money coming back to you. And also there's just many other credits like the EV credit and energy credits that a lot of taxpayers have not even taken advantage of, who buy Teslas and various different EV products. If you're somebody that owns EV products, or you're thinking, you know what, I want to have more sustainable energy, shouldn't your taxpayer, or shouldn't your tax professional be able to recommend these types of things to you? And so as a tax accountant, as a tax professional, it's always important that when you're looking to reduce somebody's tax bill, that you take into consideration tax credits. Don't just look after deductions. Tax credits, it's dollar for dollar money coming back to somebody. And sometimes tax credits are refundable, which means that they can receive money coming back in the form of a refund check. You're trying to become an aspiring tax accountant or aspiring tax professional, make sure that you always brush up on your tax credits every single year and you utilize them when you have the opportunity to with your taxpayers. All right, guys, last but not least, and probably the most important rule that you need to follow as a tax professional is always make sure that you rerun numbers for your taxpayers at the end of the year. When we do tax plans in my office, sometimes we'll do a tax plan in the month of May, sometimes we'll do a tax plan in the month of June, then we'll do a tax plan in the month of October. But sometimes their income fluctuates throughout the year. Maybe they didn't get the government contracts that they were expected to get, or maybe some trucks didn't come through from the Amazon dispatcher side, so they weren't able to deliver the products that they needed to deliver, or maybe they didn't get a chance to close on the investment properties that they wanted to close on prior to the end of the year. So that means that we need to go back into that tax plan, look at how that's impacted their adjusted gross income and their taxable income, and either alter the tax plan and make adjustments. Maybe I was moving over a certain amount of money to a foundation or a 401k or a defined benefit plan or an off corporation. Well, now I need to go back into that tax plan and make adjustments based on my client's new tax liability. The reason why you need to make this a practice as a tax professional is because the last thing that you want is surprises come April 15th with your taxpayers, because they're going to turn around and blame you, even though it may not have been your fault, even though you never wanted or intended for them to owe more money than they should have owed, they may come back and blame you because you didn't help them rerun their numbers, or maybe you didn't reach out to them to let them know that they needed to change something. And sometimes taxpayers are just not in the know, and sometimes they're relying on you to be there for them, to think about things that they don't think about. And that can become a very powerful skill set that you adopt as a tax accountant or a tax professional. Think about the things that you know your customer is not going to think about. These types of things typically are like payroll. Your customer doesn't know how much they should be paying themselves from their corporations, from their S Corps. They don't know when they should be switching from an LLC to an S Corp. They don't know when they should do the cost segregation study. They don't know how much to move over to a management company. These are things that you should be thinking about for them. And they don't know that they need to rerun their numbers towards the end of the year because their net income could be off, right? So you should think about that and make that a part of your habit and make it a part of your services. If you're somebody that has enjoyed this video and you're looking to become a tax strategist, you're aspiring to become a tax strategist, shoot me a DM on Instagram and DM me the word tax. I'll get you some support on how you can grow into becoming the tax strategist that you look to become. If you're somebody that wants to learn a little bit more about tax strategy, about how to reduce your overall tax bill, even about real estate, one of the programs that I have, Tax Alchemy, is the one I'm most excited about. This program is a community of people who are all investing in real estate and taking my 10-week program to learn how to leverage advanced depreciation. I'm teaching you how to use short-term real estate. I'm teaching you how to use long-term rentals to avoid W-2 and 1099 income. And I'm showing you how to implement some of these strategies that I've already mentioned here, such as setting up off-year corporations, setting up management companies, placing children on payroll. I really leave no stone unturned. So if that is you and you're interested in learning a little bit more about tax strategy and saving money strategically and getting some help by me, I look forward to seeing you in Tax Alchemy. I look forward to seeing you on those coaching calls. Until next time, I look forward to seeing you in the next video. I just want to say thank you so much for allowing me to be on here and share these tips with you guys. Again, tax professionals, take this seriously. I hope to see you in the future. Cheers.